And once you get to that point, you can truly move the needle in your life. One of the things that is so important about this business is getting comfortable where learning how to be clear in what you're doing. When you actually are asked to talk about it, it becomes very obvious and conversational. And that's my goal for you guys, is to get to a point where you're comfortable, to not have to stand up here with notes and think and like just this is your being, this is your essence, it's what you do, it's what you focus on. And once you get to that point, you can truly move the needle in your life. Someone might come talk to Tony, and that might be the difference between him going from 200 to 400. These conversations are the lifeblood of this training. People ask me, like, why do you do these trainings? Like, this here is kind of a pain in the butt to do, like setting it up, because it's a pain in the ass. Like, these things fold open, and then every minute until the event starts, I always tell myself, all right, this is the last one. Then I get up here and then I hear the stories. I get to share my stories. Because you see the positive impact you have on people, the panels, the experiences people have. It's honestly at this point for me, that is the most fun. Like, yeah, I love the deal. I love doing the deal, but watching other people learn how to do the deal and then come back and be like, hey, I did it. We bought this, we did this, we had this. It's the coolest part. Acquisitions, asset management, and capital raising. Those are the three pillars. So when you come into this business, or if you're already in the business, think about which of these three you're going to commit to making your superpower. I'm not saying you don't have to know the other two. You have to be very aware of the other two. But ultimately, if you're trying to do anything at scale, you're going to need to pick one of the three that you are fantastic at. And people are like, well, no, I want to be a master of all three. Okay, that's like the equivalent of if you were building a house, you're going to be the electrician, the plumber, the roofer, the framer. How many of these professions do you want to take on? Theoretically, could you have your certification in all of them? Sure. You're going to build a good house? No, it's not going to happen. Tony, would you hire somebody like that told you that they were all the things? No, you'd be terrified. Like, how are you going to do? And even if you could do it all, in what order? How many houses could you build? How would you do it? Like, how would you actually pull it off? You could do it for like your first couple properties. That's usually what happens is, you learn how to find a deal, your first deal. Then you learn how to raise a little bit of money, or maybe you have some money, and then you own it. And then you figure out that there's a difference between asset management and property management. Asset management and property management are two different things in of itself. But the three things, those are the three core pillars. Now, the players in the business, you guys come across these characters all the time. You got your brokers, mortgage, insurance, real estate lawyer. A real estate lawyer is not the lawyer you go to for capital raising activities. You need a securities lawyer, IES, not security, why? Like if you're doing a joint venture where it's you and your brother and you guys are buying a property, that's one thing. But if you're starting to pool money from people, whether you know them or don't, as soon as you start pooling a little group of people together, you're treading in gray waters. So it's really important to get a securities lawyer to give you the right paperwork. There's risk acknowledgments, there's the disclosures, there's all kinds of things. Making sure that people are allowed to legally invest with you is important as well. These are all factors that you guys really need to pay attention to because it will make a difference for you. Other people, obviously trades, contractors, bookkeepers, tax advisors. Some of you might be sitting there like, tax advisor, why would I need a tax advisor? Well, you don't buying a condo, or you don't if you're trying to buy a duplex, but if you're trying to buy 20 or 30 units, or you're trying to go south of the border, or you're trying to do something larger, yeah, you need some advice. Our partnership, for example, when our investors invest with us, they don't have to file U.S. tax returns. So we're buying an apartment building in the U.S. It's in Houston. It's on Burke Road. It's right there. It's titled in Texas. Yet our Canadian investors, when they deal with the CRA, they get a T5013, which is the tax form, partnership statement of income, and they give that to their accountant, and their accountant says, cool, check the box, fit it here, da, 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 da. How did we do that? Well, tax advisors. I have cross-border tax advice. I'm not a tax anything, but I deal with enough of these guys, so I know how to deal with it. I've become the person that can articulate my requirements with them. I had a phone call a few weeks ago where I had cross-border lawyers, cross-border accounts all on the phone at the same time. I felt like an air traffic controller just trying to direct the conversation because I know the outcome that I want. I just need everybody to get to where I want to get to in a reasonable time frame where everybody has been checked the box satisfied. You ever get on a call with a lawyer and you think you have one question, you get off the phone, and then you realize you have like three more questions after and you're already off the phone? Yeah. So how do you preempt those things? The people here that will serve you on your business are also the right people that can help you guys find your deals. So these very same people there are the very same people that are actually going to help you put the deal together. In this particular circumstance, the property that we're buying, I got called on it because that broker was tired of tying it up with other people that couldn't close, and finally just said, "Okay, we'll take your offer." That's literally what it was, because they knew that we're gonna close the property. It was a big deal for them because twice they took the offer that was the highest price. So the third time, I guess the broker just ended up having fatigue. Now, the circumstances around how you find deals, these are the six most common ones. The first is poor property management. And literally, my favorite tactic is to figure out the worst property managers in an area and just find out what properties they manage. Find out the property management company that really doesn't give a rip about what's going on. Find the guys that are lethargic, that don't care. They're just there for a fee. They have the wrong incentives in place. Like, one of the things I never understood with property management is, why would you get paid a bonus to lease out a unit? I'd rather pay a bonus to retain a tenant, a good tenant. Like, think about it. When you turn a unit, you have make ready costs, because make ready means that I got to fix the unit. I got to steam the carpet, replace the carpet. Maybe I got to do some work. Whereas if I have an existing tenant that wants to stay and they're willing to put their rent up to market and maybe do some small minor adjustments for them, if we retain that tenant, instead of spending $1,000 or $2,000, I might spend $300 or $600, and I have a happy tenant that doesn't need to move. Why is the focus on getting a new? And again, my property manager, if they get paid to turn the unit, they're going to turn the unit to get the commission and then stick me with the bill that I wouldn't have had to pay if the alignment or the incentive was correctly set up. A lot of you don't think about this. You might have not even thought about this before I just said it, but it's in the property management agreement. How they behave with you is governed by how they're paid. How they're paid is governed by the agreement, how you set it up. Another one is absentee owners. Where are the owners from? We had a property, so we bought the things in Tennessee, and there was a property just down the way. It was 300 and something units. I tried to get it, but it ended up going into foreclosure. I loved this deal, but I couldn't save it. And one of the reasons why I loved it is because it was owned by half a dozen doctors from California. They all thought it was a good idea to hire this property manager locally. And they thought that property management and asset management are the same thing. And so they went out, they got their money together, they bought this property. The property manager actually ended up embezzling the money. They literally set up their own business within the business, and they diverted rents to another account for themselves. And then they told the landlord, who was in California, all six of the doctors that were working probably practitioners at the time, that, there's vacancies. And then even worse, she put through expenses for renovations that they never did. And anyways, long story short, there was a fire, the bank stopped getting paid, yada, 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 yada. All six doctors were busy. I tried to buy it, but the tax, they stopped paying. It was beyond reproach. Also, disinterested ownership. I have a feeling they were disinterested until they became very interested. Obviously, towards the end, divorce, death, less so for larger multifamily, but certainly potential as well. Financial circumstances is going to be a big one. I mentioned this morning to you guys that interest rates obviously have increased quite a bit. On the commercial side, a lot of people, and you're going to be blown away by this, in the last couple of years, they took loans on variable rate mortgages for large commercial properties for tens of millions of dollars. I put out an offer on a building back in last February. It was a $20 million asset. They gave us a 70 or 75% LTV, and it was going to be interest only for the first 3 years at like 3.25%. The kicker was it was a variable rate. So I didn't get the deal because the pricing went to the moon. I think it ended up selling for 26 or 27 million. It was whoever took it, if they took that loan. I can tell you that their variable rate is not 3 or 3.5. It's like 8, 9 right now. You're underwater. You're buried. This property that we're buying, same thing. Their mortgage was in the 2s and 3s, and now it's in the 8s. Every month they're feeding the property. In real estate, there are two things. There's price and there's terms. And I always say, look, I'm a reasonable guy. I will give you your price, but I need my terms. So in other words, you want, I don't know, call it $3 million for the property. Assume I can get there. Can you do a second mortgage for $500,000? 0%, right? Because you're giving them their price. Again, you got to make sure you're in a balanced market. If it's a seller's market, they're not going to give you anything. They're just going to take the best offer they can get. But now you're in a much more balanced market. On the other side, if your property's worth $3 million and you need to close, and I can give you $2.5 million cash, but I'll close in 12 days or 10 days, would you take it? Maybe. You might, maybe you need to sell. What are the priorities of the other party is really important. And price and terms are the most important, the two factors that will skew things one way or the other. So if somebody needs terms, you get price. If somebody needs price, you get terms. It's the best negotiating place to start from when you're trying to buy an apartment building. It will give you leverage like you've never imagined as soon as you start to compartmentalize. And then finally, the gatekeepers. So when you try to migrate to multifamily, larger multifamily, what's going to end up happening is you're going to have a tough time initially feeling like you belong in the room. When you call the commercial brokers, when you talk to commercial real estate agents, whoever it is, initially you're going to feel a slight sense of potentially imposter syndrome. It'll happen, especially if you've never bought an apartment building before, because the broker will smell that on you. De la newness, right? Like they're going to know that you've never done this before. And brokers don't want to work with people that can't close because they get paid a commission. If you don't close, they don't get paid. They work for free. And they got their own bosses. They got their own priorities. They got their clients. And in commercial, unlike residential, when you tie up a deal, it's tied up for months, not days or weeks. So they need you to close because that product is, from their perspective, is off the shelf for 3 to 6 months. So they need that thing done. They need it moved on. So how do you have that confidence to be able to close, to demonstrate your capacity, even if you've never done it before? Well, first of all, be crystal clear. So how do you become crystal clear? Number one, be very clear on where you buy, what type of deal you'll buy, how quickly you can close, and talk about deals you've done. If you haven't done any deals, partner up and work with someone who does, or be part of a community that has, because you can't just, if you have no experience, you have no track record, it's going to be really difficult to demonstrate your ability to get anything done, which is again why the community is important, the education is important, because you need to have that group around you where you can bring somebody. It's a lot more powerful to say, yeah, I got into real estate 2 years ago, I was in software sales, and now I'm doing this, versus, well, I've been in business for 10 years and I actually partnered with this lady or this gentleman, and I've been in business for 10 years, but they've been in real estate acquisitions for the last 15. It's a totally different pitch, because then you're identifying your strengths and you're not having to highlight weaknesses. You're just saying, and this is who does this part of the business. And when you can articulate it that way, you're just that much more credible, which is what all of you have to think about. Because there's no way for you to pretend to be everything to everybody. I don't stand up here and say, yeah, I've done all these things and all this. No, I have operating partners. I work with people. I have people on my team that I rely on too, just like everybody else. And what's in it for them? So be specific. So in other words, short of you dealing with a broker, because they know what's in it for them, what's in it for other people? I had a deal that was referred to me by a contractor. Some of you may have had this before too. I literally had a guy on site replacing our HVACs. He's the guy who told us that the owner across the street wanted to sell. So the 80-something unit turned into another 180 units. Crazy, right? Just because you have the conversation. So you just, by being specific on these things, you can create that, that type of engagement for yourself. So we spent the day together. Can you guys see yourselves actually doing this? Like, can you actually see yourself actioning and creating wealth, like creating this? Because that's my whole thing. Like, my goal for anybody who gets involved with M1 or pursues this is I want to make sure you guys can create a level of wealth that makes you comfortable and happy with where life's going. And I honestly believe that everybody that dedicates themselves to this can create a significant amount of net worth for themselves.